prices move in reoccurring patterns. As we can see in the Dow, we had a strong buy signal right here off the 50-day moving average that took us right up to the 200-day moving average that took us up to the 50-day moving average. We saw profit taking, a doji with bearish confirmation, but what it did not confirm was a close back below the T-line. The T-line is a very effective trend analytical tool. The fact that it bounced back up and now curling back up tells us we've got a J-hook pattern in progress. And we know the results of a J-hook pattern, that if this is wave 1, this is the J-hook, wave 3 will be the same magnitude as wave 1, which puts us back up to testing the recent highs. This also allows the investor to kind of anticipate that we're in an uptrend, so we'll be much more strongly oriented toward the long side. That same scenario is also applied to the S&P 500. Not only did it hit bottom here with a doji gap up closing above the T-line, but this made it very simple. If we see buy signals in the oversold condition, a close above the T-line, and they open up positive the next day, that pretty much tells us the uptrend is going to remain in progress. Now notice what we have seen in the recent market trend, that when they pulled it back, they hit the T-line, acted as support, did a J-hook pattern. If the J-hook confirms, with wave 1 and wave 3 equaling, that tells us this recent high is not going to act as resistance, that if they break through this level, we're going to have much more upside. Upon knowing what the market direction is in general, that also makes the price patterns work effectively in individual stocks. Notice how DHRM, a recent recommendation, broke out of this fry pan bottom, consolidated right back to the T-line, even when they had a doji gap down, which wasn't in the overbought condition. It pretty much told us they couldn't close it below the T-line. Positive trading today told us that the T-line was holding. If they open up positive, this J-hook type pattern setup tells us that if this is wave 1, wave 3 will be the same magnitude. Again, this is not rocket science. This is just graphic depictions of what goes on in investor sentiment time after time, year after year, decade after decade, and century after century. It allows the candlestick investor to anticipate where the high probability trade situations will be. That'll be it. We'll see you in the chat rooms.